Morning. Thank you all for joining me. Today I'm going to be focusing on pivot analysis and combining that with the Starc bands on a bunch of different time frames. So I prepared a bunch of slides. Most of them use StockCharts, but they can be done on a number of platforms. And I want to start off with some basics first. And I will be periodically checking the chat board to see if you have any questions, because that's important part about learning is to answer all questions as they come in. So let's turn to the first slide. I hope you can all see this slide of the Viper YouTube page. And okay, I think you should be able to all see this basic page on StockCharts. It looks to be available. So we'll double check that. I have a bad habit of switching to a different platform and not always letting you know. Okay, for those of you who are not familiar with pivots or how to do them in StockCharts, a brief refresher. So this is a daily chart of NIO, a very hot stock this year. I'm sure many of you are familiar with, and it has been some great trading examples. Put up a daily chart, and you go down here and you say pivot points. That's all you have to do. I selected them to be purple because that stands out pretty well. And there you go. And so the solid line here is the pivot line. First line above that is the R1 resistance. And then the second one, let's see here, for example, is R2 resistance. And of course, below there you have S1 and S2. And so I find them quite important, kind of want to take you through sort of a change, in trend. And they're also helpful to, if you see this chart and you want to add the Keltner channels, which are the equivalent, not exactly, but close to the Starc bands. So you add Keltner channels here. There's a 20 here. You change that to 6. That's the amount of moving average you're wrapping the average true range around. So let's change that to 6. And change the 10 to 15. And update it. And so now we get the Starc bands. So that should get everyone there. So you can notice here that a couple of interesting points. So here we have in early January, this is January 2020, we moved up to that upper Starc band and hit the R1 rather, resistance. And when I see that happen, probably on this bar, if I happen to be long this stock, I'm probably going to tell you to get out, because I think the risk is pretty high, particularly since this stock really had not at this stage completed a major bottom. You can see we pulled down, to the pivot by the end of the month. Often it's quite interesting the start of a new period, in this case a month, because sometimes you see a turnaround, sometimes you see this sort of activity. You move above the pivot for a couple of days, and then you drop back below it. That's a sign usually that the downtrend is not over. We got a big pop to the upside. At this point in this stock's trading history, it was pretty thinly traded, and so that made it a different sort of thing. It was more easily moved. So we got a pretty good decline. In March we got below the S2. Then in April we came back above the pivot. So when I see, one thing I look for is sort of this sort of trading. We get a pop above it, and then we start moving, holding it around. That's often a sign that, it's changing trend, and that's a good entry often. I sometimes use the S1 levels as a stop if appropriate, but, otherwise, like for example, in this area, this is a strong bar up here. You probably use a stop under this point, and that would, that would keep you going. And then, of course, you want to look at, some of the, in terms of, well, what's the potential of this trade? Well, one simple way to do it would be to look at the Fibonacci levels, which show that as of this chart, we already made it above the 38% here, and it looks like we closed above the 50%. So 61.8%, 4.3, that certainly looks reasonable, and now you're down here around 3.2. So you have $1 on the upside, which may not seem like much, but percentage-wise, it'd be about 33%. And then, of course, you have the R2 up here at 5. So that kind of gives you, a little guideline for what you can look for a price target. And that's, so let's look in, let's, so that's, I won't save these, but so that's on a daily chart. So if you want to say, okay, well, what about if I look at a weekly chart, and if you change this to weekly and then hit update, unlike most platforms, you get yearly pivots. So, this is the yearly pivot based on 29 activity, which was not very substantial. And you can see the pivot here was, about 5.25, which was turned out to be a moderately important level of resistance. You have the, the R1 here at, I guess, about 930 and the R2 at 15. Both of them turned out to be significant during the year. And of course, if you go to hourly, then you get the weekly pivots. So you can see that these even work pretty well too. So sometimes, if you're an option trader, then you can maybe use these. Let's say if you're fortunate enough to say buy a put up in here, and later in the week you're getting down to the S1, you probably got a great profit. That might be a time to take it. And you can see the next week, we made it up to the R2 level up in here, and as well as the hourly Starc band, and then dropped all the way back down. So a lot of these turning points, and then we had a pretty sharp correction in February, and this is what you often see. So if you think, well, okay, this is a kind of a confirmed downtrend. We came down, we closed below the monthly or the weekly pivot the last week of February. The first rally fell well short of the pivot, and then you can see for the next 3 weeks, we pretty much stayed below the pivot each of those weeks. So it was a pretty, you went from, I guess, about 480 down to 220. So then you can see the transition back to the upside, the same sort of behavior. Sharp push up here above all the R levels, back down to the pivot. And that's typically, kind of what you see. And I often use this, in looking at if I'm going to establish a position. I also look at some of the weekly pivot levels for an entry. Those of you who've heard some of my other presentations kind of know I use a lot of variety of technical methods to determine entry levels. So we're moving forward here a little bit, and you can see that we broke out in late April. We hit the R1 right here, pulled back, held the pivot again, similar to that last essence opportunity I saw, started a new uptrend. Oftentimes, you get like in June, we blew through all the monthly resistance levels early on. So not really, it's pretty much blue sky above that, particularly as we saw on that weekly chart. This was sort of a major breakout at $6. So, not much to worry about. We got into July, and, oftentimes when you see multiple days up, I'm sure if you look back, and search sort of, headlines, NEO, July 7th, it was making a splash somewhere. So, we shot up above the daily Starc bands for a number of weeks, all above all the resistance levels, before we got a very nice setback. Now, NEO's had a characteristics of forming these really nice sort of flag formations. Sometimes, they're, when you get these wide-ranging days, it's better off looking for them as a solid line. So you put this in a solid line, you get a little more definition that this is some sort of, continuation pattern. Which is one of my favorite types of formation. You can see right at the end of July, you came back. So you started off the week above the pivot. So the pivot looks to be around 12 there. And so that's sort of the area you're looking for. So let's change this back to candlesticks. Okay, so you're looking at this market, and you can see that looks like we've had a really nice run, another pause. So you can look at going into August. Okay, you have a target here at 1650, and then just under 21. So I think the next chart will take us forward in time, hopefully. Okay. So here is that, here's that correction, and oh no, never mind. Back in here. So here's August. So it made it here. You can see all through September, we consolidate again, once again above the pivot level. You can see that we drop down to the lower Starc band here, but really tight ranges here. Um, that I think is always a bullish development after you get such a strong move. If you look at the overall market and you run some sentiment numbers, it really indicates a change in sentiment. A lot of bullish activity here, and then the stock just goes quiet. So a couple of weeks into this, some of the people who are looking for a short-term trade probably, threw in the towel, or if they were in options, if they were out of the money, they were decaying into nothing by that point. You got another pop back above the pivot to start off October, another nice surge to the upside. You can see these sort of top formations I've kind of isolated. So we get 1, 2, 3 days above the Starc band, 1, 2, 3. Then you get some sideways activity. And this action in here looks quite similar to what we saw during the summer. Sharp moves above it. Once again, we're above all the R levels. And so the risk was getting a little higher, and probably if we switch quickly to weekly, you'll probably see at that period, yes, we were above the weekly too. So this, 3 weeks above it, and then we had a high this week of 57.20. The next week was down to 38. So that's $20 on a $55 stock, say. So that's a quick 30% move. That's plenty, more than 30% actually. So that's the kind of we go back to the daily. Where did that correction pull back into? Okay, we dropped back below the pivot in December. Once again, what did we form? Another, continuation pattern or flag formation. And we got another push to the upside. So this chart is active. It's up to Friday's close, and so we've been consolidating for some time at this point. And let's look at. I think I can save this, and let's put some indicators on that. So I'll put my normal daily setup. Most of you are familiar with. So you can see the flag formation. So this is the NEO versus the S&P 500 or the SPX. So to enter that in there, you go down to indicators. You have a price field. You have a $ symbol, colon, $ SPX. So you're comparing the price of NEO to the S&P. If it's rising, it's acting stronger. If it's falling, it's acting weaker. Below that, in green here, we have the on-balance volume. And I'm running a 21-period moving average over both of those. So that's how you set that up in there. And you can see that back in September, we all started to move, break out. We were making a pattern of higher highs, all through the fall, basically. And then for this, breakout level, you can see that the RS started to turn a day before, I think, the breakout level, and the OBV was positive. So everything is positive now. Right now, slightly negative. And one question I often get is, well, does that mean the trend is ending? That would not be my interpretation. What I normally would do is sort of look at the fact that both of these have made higher highs with prices, so there's no real divergence, and you can pretty much tell from this that the weekly analysis is also going to be positive at that point. Got one question, supply to futures? Yeah, I mean, except if you're looking at the E-mini, it's not going to do you any good to compare it to the S&P because it's the same index. So, you could compare it to the NASDAQ futures if you're trying to decide which one to trade. But so the current situation in here, we kind of have, you can see this is one thing I like about StockCharts. You know, besides being cheap, it's 55.67, 55.15 are the two support levels. And oftentimes you see this sort of correction, sort of like an ABC correction here. And usually this first drop it doesn't complete it. Sometimes it will, right here, we just had a couple of days down and it rocketed to the upside. More often, if you've had a nice run to the upside, so this was a pretty good move, then you're going to see a leg down, a leg up, and then another leg down. Those of you, I think it's really important to understand chart formations. So if you don't feel like you know chart formations, spend some time. It'll be worth it. You can use pretty nice measuring techniques to measure the, the upside targets. So like you measure the triangle here and maybe here, and you get, you add that amount right onto the breakout level. And so this was like roughly 57 to 41, say. So 16 points. You add it on to 48, and you get 64. We hit 66.99. So, sometimes working with students, they think, oh, yeah, I get that. Chart analysis is easy, but, it's, at least in my experience, I may just be a slow learner. It was not easy until I studied quite a few charts. So, this looks like it could decline a little more. There's one interesting technique looking at the 60-minute chart of this consolidation with NEO. So we had that, that high at 66.94, the pullback, sharp rally up, so these people right in here probably thought, oh no, I missed it. The correction's over. The next day it opens up and then back to the downside. So you can see that the hourly, Starc bands, these are real Starc bands, help you out quite a bit. I mean, they get back in here. So if you happen to be short, you want to buy down the lower. But let's add a couple things to this, which is really easy. This is Trade Navigator. So if we add the weekly pivot levels to this chart, then we can see, okay, blue is the pivot, R1, R2. So that first move up in early January hit the R2 perfectly, came back down to the weekly pivot by the end of the week, popped up to the R1 here in the end of January, back another correction. You can see at this point we've just been bumping into this, the R2 for last week. We never made it back above it. So that'd be the first sort of thing I'd be looking for. And to look at the quality target is based on the fact that oftentimes in trading history, we have this decline from this point down to here, and we get a rally. Well, oftentimes the decline from this point will be the same amount in terms of dollars. So this program has a really neat way for doing it. So you're taking the distance from here down to here, and then from here, and it gives you the 100% level, which is at 53.20. If you can see this number in here, we can bump it up a little bit so you can see the numbers a little bit better. But so that's a potential, a possible target. Doesn't mean it has to be hit it, but oftentimes it works pretty well. And as I'll show you that chart on Roku. I've seen it happen a number of times. So it gives you a really good strategy if you're bullish on that. Probably early next week, be a time to looking at this. And particularly, there's some pretty good support just under $50. So the risk is pretty favorable if you do get down to this, 53.20 area. So let me admit one more person. Let me see what the chat room has to say. Floor trader pivots. Yeah, these are the basic. This one I think is a slightly weighted version, but yeah, basically you can use the floor weighted. I've never, I started using these in the late 80s, early 90s, particularly on the originally on the foreign exchange markets. So I never saw. Looked at some of the other formulas that, they have, all these other people have their own little modification of them. Basic premise the same. If you're above the pivot, it's positive. Then you have targets at the R1 and the R2. Below the pivot, you have targets at the S1 and S2. And, whether those are better than the floor pivots, I can't really tell you. Before we move on to another market, it is important to look at the volume here. So and particularly when you're seeing these continuation patterns. So if you can see, let's be sure we get back to everyone can see this chart. Okay, should be able to see it. So, right in here in September, we had a nice high, 2097, 2105. We got down here to 15, 61. So $4, that's 20% drop. We got this long sort of, if you magnified this in an hourly chart, you'll probably see a triangle or flag formation. Look what happened to the volume here. Throughout September, volume is really low. So, if you look at, numbers, easy to do on. So we were seeing like, low volume, but low volume was like 111 million, down here, net 75, 70, 70, and then we start to rally. We get 164, 183, we consolidate again, low volume, surge to the upside, okay. Another slight pullback. Once again, the volume's down here is around 72 million. And then you start to see, this was the day to get on board because it was a pretty tight, we were pretty close to that low. The 20 period EMA was rising. So it was, all in favor. When you get a high spike like this, it usually sort of, it's sort of a warning sign. If you get that highest spike, and this was probably one of those days. No, I guess it wasn't. So we closed at 48.30. The next day we opened about $3 higher at 51.29, surged to 54.20, and then closed at 44.56. So even though we had more push, it started to get a little elevated up in here. So it's really important to look at the volume. Once again, what this flag was forming, we got volume. At that point, the low volume was 132 as opposed to 75 down in here, but it's the relative thing that makes you important. So this volume pattern right in here does support that view that this is just a pause in the uptrend and you're going to see more. Okay, well, let's to change markets here. Another fun market to be in lately has been, or for a number of while, has been Roku. So this is a chart that takes you back into 2019. So when I first started, changed from biochemistry to technical analysis, I went through a lot of markets and looked at them back in those days, it was like, during the bear market of 73 and 74. And we had some pretty good activity in the late 70s and early 80s. So I would be looking to see how the indicators and the methodology worked before I adopted them and started putting money behind them. So, same sort of reiterate the same behavior. We had a really nice run in Roku. We got, above the R1 here. Okay, here's the pivot. Above the R1, came down, the start of the next month. We held above, these S1 here at a low of 87 and, 87.24, and that low S was probably 83. So right here, we're about $3 from the S1 support. So another nice push up. You can see hit the R1 and the R2 and the Starc band. So you went from 87 to 113, $26 move in a couple of weeks was a pretty nice one. Okay, market takes a rest here. Once again, this is probably, you could find a headline for Roku at this point. You can see the volume was really high, and then we have another period of consolidation, and you can see the volume retreated, and right down here at the lows, it was quite low. In Roku's case, it was down here at 5.2, 5.3 million as opposed to 21 million. So of course the next boost to the upside, once again the volume started coming up. We had a volume day here of 7 million. So it was above that last 4 days. That's a good sign. And the market was still consolidating, made a low of 96. So you look back at this low, that was a low of 92.50. So that was probably your stop place on that day. Gave you, I caution people not to use the obvious stops, which would be like, well, it was already below that right here. If you're buying in here, you might have looked at this stop and would have got stopped out. So, the volume pattern was really supportive in that instance. And we blew through, the R2. We got to the month of August. So if we look at, we flip here quickly to the weekly, and we're going to see that the R2 here. So at that point we're all above them. I wrote an article a while back on yearly, which is what these are. They work amazingly well. So the nice thing is you don't have to, if you trade a certain stock on an ongoing basis, you just have, basically 5 numbers to watch throughout the year. So that's that's a nice spot to be in. Well, let's look at another Roku development. Okay, so here we go. We had another. This is later in May of 19. So we had this nice. Let's see, where did we leave off? August. Okay, so this is earlier in that period. And another nice flag formation. Same sort of thing. Volume. And below this we have the RS. So if what I typically do is look for the trend here in the RS is positive. So then I look for a resistance level to be broken. We've made new highs here, so I'm just looking for us to really move back above the moving average. We got you get a pull above the moving average and then back to the moving average. That's a pretty bullish setup. Everything was positive. We just sort of edged higher for a week and a half and then really hit the gas. At that point, that volume was really strong. So that's one reason those are 2 of my favorite indicators. You can also let's say save that one too. Okay. Short term, those who are, a lot of people use a really short term RSI. I don't like, I of course developed the MACD histogram and I run it periodically, but I really caution people against using too many momentum indicators, because if you look at the RSI, the stochastics, MACD, commodity channel index, they're all basically looking at the price action over a 7 or 14-day period. So if one of them's wrong, they'll all be wrong. The volume is totally different. The relative performance is measuring against the S&P. You probably have gotten tired of me saying, but the reason you want to be in those market leading stocks is when the market's up, these stocks that are leading it will be up more. And when the market corrects, they'll usually hold up better because people, they already have a nice profit in them. So if the market declines, their stocks are holding up, they'll keep them. A short-term RSI like the RSI 2, you can see it's occasionally gets some nice divergences. I like it most on bottom formations here. So in that April, right in that period in here, we're down, we're trading above and rather than below the S1 level, and now you start to get some bullish developments in the on-balance volume and the relative performance, and you've created a bottom here in the short-term RS too. So that's a good trick. So let's look at that formation using the same sort of the equality target, and if I can find the chart here. So here you have the same move. You guys had a high here, 74.35, so you dropped to 59.63. So if you look at the numbers, you can just subtract that numbers, and you'll get roughly about $15, and then you subtract that amount from 71.30, and you'll get like 56.30, and the low here was the target was 56.58, and the actual low was 55.02 right down in here. And so it helped to really, buying that first pullback, was sort of a hook. And time-wise is also, you had a really nice, one way you can maybe determine whether, you're going to see a simple or more complex correction is what kind of move you had before. So we went from whatever, 33, up to 76, 2 months. So you over doubled, up over 100% in 3 months. That's going to take. So anyone that that bought up in here, it probably hit the news and et cetera. Then that's going to take some time to get over that. Really, change in sentiment is what these continuation patterns are, and that's they have really well defined parameters. You can see the flag formation here. You can do the same thing we did on the other one. You can either draw it, sort of a downward sloping channel, and it'll give you those targets on the upside. And of course, if you we want to add, we can add in the pivot levels. So let's add the monthly, okay, R1, R2, S1, S2. Okay, so look what happened at that March high, right near the resistance. Okay, the R1 resistance for March, was whatever. It was like, almost hit exactly. Got down to the pivot, rallied back up, didn't quite get to the R1 in April, declined down below the S1 here. This green line is an S1, and then bottomed out back above the pivot. I mentioned that oftentimes the early, whether it's monthly or whatever, or the weekly, you see this sort of pattern like, you're thinking this is maybe a bullish market, and you see it holding for a few days, just above the new pivot, often a good sign. So on that rally, we just accelerated above, the R2 resistance. And that was a pretty good move. So let's see, correction to 3. Okay, let's go back there. Yeah, we'll review some of the markets. Somebody asked me before we're done today. So let's see which one of this is number 3, 2. So let's look at one more Roku example at least. Okay, yeah, it's not much different than, so also you can use Fibonacci analysis in combination with these other tools. I always have more confidence if I come up with a support or a resistance level that's basically determined by, methods that are independently calculated. So, Starc bands obviously are not, not based on chart formations or Fibonacci levels, nor are pivot levels. So you have this, this move up, and then you can see this whole rally, was one of 38% was right in here. Was it 50? You can't see this number, but it was 56.65, I think. And then the 50% was 49.81. Now, oftentimes, a correction will hold somewhere between the 38 and the 50% level, which was right in there at 55.02. Remember, we were projecting from that equality measurement, it was going to be about 56.20. And, once again, the volume pattern here, was supportive. So there were a lot of things in that your favor in terms of looking at that, that level for a possible entry. So let's see which one of these. Okay. Now, and if you look at the, interesting just to look at this sort of setup. So you just have a pretty simple chart. You have the 20-day moving average, and you have the pivot level, but you can see a sort of a pattern here. We moved above the pivot here, came down, stayed around the pivot. Once again, above the pivot up to the R2, pulled back, R2 again, back below the pivot, the start of November, held up, and this is a current chart. So then we got quite a rally up, exceeded all the R levels in November. December, we hit the R2 here almost perfectly. Let's look at those numbers. So if you're going to say, okay, well, it's, that high was 361.04 and the pivot was at 359. And of course, if you want to add the Keltner channels to it, you can see that we were pretty up close to the the Keltner channel right in here. And besides, you move sideways here. I mean, I think if you blew this up, you'd see there was a doji right in here. And so then you got sort of a reversal signal. Where'd that stop? It stopped the next month in January at its pivot level before it resumed higher. So right now, this real strong the last week. Volume hasn't been that impressive at this point. So, buying it up here, you're kind of 439. The R1 is at 453, and the Keltner channel is at 463. So, it's not quite as advantageous. You can see that the 20-day EMA is down here at 406.50. So that's not, that's quite a ways above it, and the pivot down here, those of you who are, if you aren't using StockCharts and you're interested in it, as I said, I have no deal with StockCharts, but they have a 1-month trial, and then you can sign up for, I think the cheapest package is $15, and the mid package is like 24. Main difference is the mid packages, you can have a whole bunch of different lists. And those of you who worked with me, you can see, the number of lists I have is incredible. And so that's handy. In the cheap version, you only have one list. So it's nice of, stocks you're monitoring, but you can look up here, you can see those purple numbers. That gives you the pivot levels for whatever time frame you're looking. And these give you the Keltner channels, So 463, as I said, was the upper Keltner channel. So that's something, handy to know. And, if we look at this, apply the indicators to it. No real worrisome signs. They're both positive. So, these are kind of the key lows. If you were to drop back much below these lows, you can see the OBV bounced off it a week or so ago. So it's still positive. And then, of course, you look at the weekly. We'll add a little more data in here. Very strong, almost too strong, because you can see we're up, now we're near the yearly R1 already is at, what is it at, 444.23. The R2 is at 556.45. So that's, suggesting that could be a possible target some point in 21. I wouldn't, bet the farm on it, and certainly not up in here, but if you got a pullback, that would be interesting. But you can see the RS is really strong. It's really been a market leader, since it broke out here. OBV is also really strong, and that's a good sign. So nice combination of indicators. I'm going to look at one more example, then we'll kind of look at the current markets and sort of wrap it up. Oops, wrong one. Hey, let's go. So LMT, oftentimes, not always, you get a really nice bottoming signal. So this was Lockheed Martin. And at the end, of course, this is the last quarter of 2018. We had a huge slide and into the end of the year. And, things started to turn around pretty well here. You can see, both here we had a doji and a doji sell signal. And here we had a doji and a doji sell signal right at the start of October when the market really fell out. So, I like StockCharts. They do a pretty good job of maintaining your chart levels, if you want to. So you can do, you can save them from, if you have that list capabilities, you can save them from week to week. And, this is a really good example of a really strong bullish divergence. Okay. If you don't know much about divergence analysis, it's really positive. So you can see that we had this low here. Okay. And then LMT made a much lower low in December of 2018. So this low was in May, I think, or something, June. But look at the OBV. So that is indicate the accumulation. You really don't get that necessarily from the histogram analysis. And then, of course, the level you want to watch, is those twin peaks. So when you get above that, that was the breakout level for a major bottom. And, that right around in here. And so, I look for opportunities like you get right in here. You have like a 3 or 4 week pullback. That creates a really good entry opportunity. So let's save these for a second, I guess. So, and then you can, I think I have this in the other ones. Let's see, this one. Yeah. So you can add the, Keltner channels here to that. You can see at that low, it was right near the lower band. So near the lower band, high risk sell, low risk buy. So a lot of markets were in that situation in December of 2018, and the way the AD lines were acting, I said, I don't think this is a new bear market. You look back, there were a number of people that were saying that, and but the prices in the major averages were dropping a lot more than the AD line was, and so that was a bullish underlying indication, and so turned out to be right. So at that point, yeah, a pretty good trade. So if you look at, we've had such a run, you don't see a lot of markets coming out of major bottoms like that, but you find a few, and you're going to see those formations. I've seen these formations like this going back, 20, 30 years. So that's, so let's look at some of the current market activity. Let's see here. What do we got? So of course, somebody said the SPY. Okay, so this is what the SPY looks like. Okay, the S&P AD line. So I look at the actual levels because it's been kind of touch and go. 65,312. So 65,368. So we did make a new high. Oftentimes I turn cautious in here because you had a short-term downtrend in the AD line, and you may say, well, couldn't you tell that was just a correction? Not necessarily. It's sometimes I've seen this happen, like in 2014, the Ebola thing, just fell out of bed, and it was down 10% in like 3 weeks. So I kind of pull in my horns because I want to sidestep that. The AD line is generally much more, positive on market lows. You can see we moved back above its moving average here in November. This is a really bullish sign, and oftentimes people always say, well, I don't use tech. So I had somebody mention to me they don't use technical indicators because they're all lagging, which of course I don't agree with it, but you can see, we broke out to a new high right here in October, and then we broke out to another new high in November, and all those said that, okay, well, we're right in, say here, we're going to move out to a new high in the major averages. Well, that wasn't a lot for the S&P, but oftentimes it is. And so this is positive. The on-balance volume is positive there, a bit overextended. Okay, we can see we're within $4 of the daily Starc band. So that suggests that we could look for a possible pullback early in the week, and then you look at the pullback level is the 20-day EMA, and then you can go back into those same sort of weekly pivot levels and say, okay, let's refine that entry level for a possible area to buy. So if you look at the weekly on this, of course, is what I do every weekend, and same sort of picture. It's 65345, 65185. So new high here, not too close. You can see we got up in February, or in September rather. We spiked up, above the Starc band, and 357.70 was the Starc band, and the high that week was 357.32. So I don't really have a chance to explain it very often, but basically because you're like this week, okay, we closed here. So next week, the upper band is at 405 and the lower band is at 352. But, if we get up to 405 by the end of next week, that band's going to already moved higher. So that tells you what the 92% price activity is going to be between those two bands for the next week. But graphically, like was the case here, it doesn't really show. But it is. So you have to pretty much check the numbers. That's basically what I do. And so let's look at the Qs. Qs look a little less positive. Okay. We've been diverging, right in here before that sharp correction. So that was that's the first time we've really seen a negative divergence of any extent all year, in the past 8 months anyway. And you can see we made lower highs here, broke down sharply. It was a little concerning that I think we dropped, that was the one level of support. The tighter level of support was at the December lows, which we got close to. So right now we're at 13,414, and so we're not far, but we are below this high. Additionally, we have a doji formation here, with a low of 329.53. So we get a close back below that. That'd be a short-term sell signal. It could be just like this one, not necessarily tradable if it's this short, but at least tells you that if you're waiting to buy, you can probably wait a little longer. And in this bar, of course, same sort of thing. So we got below the lower Starc band was 313.93, and we got down here to 312.76, so below it. And okay, let's do his questions. I usually StockCharts only has an exponential moving average, okay? And so I can't use a weighted. I would prefer to use a weighted moving average. Maybe if some of you have more influence than I do, you can get them to change it. That's why, the Keltner channel is not necessarily the same as the Starc band, because the fact that you need a simple moving average and they want you to use an exponential moving average. So, that's it's really not a big programming deal, but they won't do it, And so right here, what am I using? The ADCD. So this is the advanced decline line of the NASDAQ 100. Okay, so it's looking at those 100 stocks, and what I see is, it takes their advanced decline line. If you look at the weekly here, you're seeing the same sort of thing. It's not quite made a new weekly high, and did have a weekly divergence back on the 22nd of January. So both are well above their moving average. Only the Dow AD line dropped below it. So, typically, as long as you're making higher highs, I'm not looking for, a bear market. However, obviously the odds of a sharper correction, are pretty high there. And if you see, let's see what can. So that's the AD line. Here's the 21 period weighted moving average, survivor's guide to market correction, and it takes you through, a bunch of different scenarios back in time. And you'll find that the common thing was pretty good. This is February 18th. Another time when I talked recently about all the sentiment, and the institutional sentiment was really over the top. That happened right in here. And that was a survey as of the middle of January. We don't have the February survey yet. So you can see we got to 2872, and, soon we're, 340 points lower in a matter of days. So that's what happens. Another one sort of, a divergence here in the AD line. So you might find that, helpful if you want to read about it. And let's see. I think I answered all the questions, and I hope you all enjoy this. My email is tom@Viper Report. So if you have any questions about it, like any of the links or the setups of the charts, I'll be glad to send them to you. And if you don't have, I also use TOS. Didn't include any TOS charts in there, but TOS has some great stuff. They don't have quite the, at least I haven't been able to find them. If they do, they don't have all the AD lines that are available on StockCharts. The StockCharts has all 6 that I follow, and so this is kind of my typical, chart of the Spider Trust, the daily chart. A little different. You can see the, R2 up here in the upper Starc band. This is the S&P 500 AD line. So we broke that uptrend briefly, a week ago. Got down into that, lower band carry. This is so it gives you another one that I watch. It oftentimes will give you, better signals, but often they're conflicting. So, that's why I look at 6 different ones every evening and see what they're telling me. So with that, I thank you all for joining me, and I'll probably be sending out a survey, and it'll type survey in the subject line. So if you watch this today, please respond, because I appreciate that, and it tells me also what I can do in another one, what topics I can talk about, etc. So great. I hope you all have a good weekend and a good